Hey everyone, Heather here, and this is going to be a quick video on what support and resistance levels are. You will often see in our videos that we continuously use support and resistance levels almost everywhere in our trading. So I thought if you were a new trader, you might not know what these levels are. So let's talk about them today. So support and resistance levels, as the words imply, are two kinds of levels where the price bounces off from. So let's say if we have a support level on the chart, then what happens is when the price comes down to that level, then that level acts as a support for that price. And similarly, let's say if we have a resistance level on the chart, then whenever the price goes up towards that level, then that level is going to act as a resistance. So before diving into how to draw those levels and everything, why do these levels work? So there are a couple of reasons. The first one is market psychology, and there is something called a self-fulfilling prophecy, where since a lot of people in the market know about these support and resistance levels, and a lot of the people have the same levels on the charts. When prices reach these certain levels and everyone in the market thinks that, like, oh, this is going to be a resistance level, then that level actually becomes a resistance level as well. For instance, let's draw out a random level. So let's say this was a resistance level. So let's say when we went here, we came back down, then we went here, we came back down for some reason. Now we have come back down from the same level twice. So the third time we reach at this level, the entire market, since there are millions of participants, they might think that, okay, we came back from this level two times, we might come back again. So as soon as the price reaches here, a lot of people are going to sell their shares. And since selling accelerates a bearish move and buying accelerates a bullish move, that's how it's all about supply and demand. When a lot of people are going to sell their shares here, the price is going to go down. So you see, this is a self-fulfilling prophecy, where these levels, let's say they get formed for some random reasons, but now that they have been formed, people think that these are like actual levels where they need to sell and buy, so which then becomes a self-fulfilling prophecy. But there are some other reasons for this level as well that are more solid. One is that there is this human psychology that really likes to consider round numbers as support and resistance level. So let's say you bought the stock at 27.123 and the stock reached 30. Now that's a really nice number and you might want to sell on that number. Or let's say the price was at 23 and then it reached 20, so that seems like a nice number, so you might want to buy at that number as well. So this, and then obviously I think these levels, again, they are not completely fake, and it's not like that. These levels work really well. There are just some weird reasons that these levels work, and no one really knows why these levels work the way they work. But since these are formed on the charts and the entire market participates in following these levels, we have to know about them and we have to follow them to improve our trading. So let's draw a few levels on the chart and then I'll show you a pretty interesting thing. So let's say we were going up, we came down from this point. So we have no idea why, let's say, why we came down from this point. Let's say there were bad earnings or whatever the reason was. Let's say some bad news came out. Then let's say we go down and we go up again. And let's say we go down from the same region. Now we have touched the same region twice and we have gone down. So the third time, as I said, when we go up, people are going to think that this might be a resistance level, as it has become now. So like, it has touched this price, this region two times, and it has gone down. So this has acted as a resistance level. Now the third time, when we come here, people are going to sell, and this is going to act as a resistance level. Let's see something else. Let's say we were here. Let's say now that we are coming down, we came down here and then we went up again. Let's say the second time we came down here again and we went up again. Now it has been two times since we have come back down to the same level. Now that level has become a support level as well, because in the price action we have come down to that level, and that level has respected and supported the price action. Now that you know that this level has acted as a support level, so again, these are horizontal support and resistance levels. We'll talk about other support and resistance levels in a minute. So now that you know that this is a support level, if you just extend it horizontally and if you just create a small region around this. So you always should create a small region around these levels, because it's not just a single line where the price is always going to come down. It's usually a very small region. So as we can see that this is a very small region. And now these 3 times, let's see, the price has, oh come on, the price has come here, 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 and here, and it has actually respected those 3 levels. So this was just a quick introduction and demo of what these support and resistance levels are and how do they work and why do they work. Let's see. So we have, all right, give me 1 second. So what other types of support and resistance levels are there? So horizontal support and resistance levels are not the only ones that are there. There are all kinds of support and resistance levels that people use. There are some dynamic support and resistance levels that come directly from the moving averages. So many times you'll see that the price falls or reaches to the 20, 50, 100, or let's say 200 moving average, and then it bounces back up or it bounces back down. So in this case, you can see that when we came down here, we almost reached the 50 moving average. This is the 50 moving average and this is the 20 moving average. We almost reached it, then we went back up, and then we came back down. Again, we touched the 20 moving average, and then we went back up. Again, we came down, we touched the 20 moving average, then we went back up, and finally we broke the 20 moving average. So this is how moving averages can act as dynamic support and resistance levels. When we are going down, you can see we go up, then now this has become a resistance, we go down. We go up, we go down, we go up just a little bit, and then we go down again. We go up and we go down. So now in the downtrend, the moving averages are acting as a resistance. In the uptrend, they were acting as a support. Similarly, we can also have, let's say, trend line supports, where you can see that there is a trend line. These are almost always subjective. So if you see a clear pattern on the chart, then sure, that's a good thing. But please know that these are also always subjective. So let's see. So now that we now that we know about these levels, how do we use them? One tip just before I talk about that is when a resistance level is crossed. So let's see, when this level is crossed, it now becomes a support level. So now let's say it was crossed here, the price came back down, and that acted as a support. The price came back down, and that acted as a support. So whenever a resistance level is crossed, it becomes a support. Whenever a support level is crossed, it becomes a resistance. So let's say we go down from here. Now when we are coming back up, this is going to act as a resistance, not as a support. Please remember that. Now how do you use these? Since you can see here that the price always bounces back from these support and resistance levels, the rule of thumb is you always want to buy at some kind of support and you always want to sell at the resistance. Or you always want to buy when we are breaking a resistance, that's called a breakout, and then you want to sell when we reach the next resistance. Or you want to sell, let's say you're shorting the stock, and then you always want to short at the break of a support, or short at a resistance and then cover at the support, or short when a support is broken and then cover at the next support. So these were some of the tips and tricks on using support and resistance lines and what they are. I hope they were useful for all the new traders. Let me know if you have any questions in the comments. Thank you so much.